Hello, everybody. So today I want to cover 4 stocks that I find particularly cheap right now. And it's tough to come by a cheap stock with the rally we've had over the past, 4 to 6 weeks. But let's get started. And these stocks are on my watch list. If you're on my Patreon, you know which ones I've been adding to as I put my DCA moves and DCA alerts. Anyways, the first stock is TransMedics. So TransMedics is a stock that has been beaten down minus 65%, let's call it 66% down since August of 2024. And the stock went down because even though it has had a stellar growth, pristine revenue growth, well, there was a slowdown in the last quarter. The last quarter there was a slowdown. Now the market share was flat. A lot of people were upset that the market share didn't grow, even though there was a slowdown. The CEO attributed the slowdown to a slow season, a slow transplant season. And my assumption to this was, well, there was a slow driving season in the US. People didn't travel as much, so it makes sense that there would be less transplants happening. Now, of course, a lot of people are saying that this issue of lower transplants may have to do with this thing called normothermic regional perfusion, or NRP-CDCD. A lot of doctors don't like that practice, and the CEO of TransMedics, of course, doesn't like that practice. There's a lot of issues with the idea of brain death and the idea of keeping the organs alive within the donor. And you feel free to pause the video and what you think about that. But of course, a lot of transplant centers have been implementing this because it's, maybe not quite, but maybe at roughly a tenth of the cost. So it's significantly cheaper to do that, but it causes ethical issues as to when the death of a patient occurs. And so there's people that have been calling for this practice to be banned. I don't know. I'm not an ethics expert. What I know is that this is creating some fear into the stock. And, either way, there's still going to be a demand, in my view, for a premium organ care system for transplants, and they are a premium system. Now, some analysts have mentioned competition, and it's noteworthy to mention this company called OrganOx, which is a British company, and they seem to be starting some studies in the US, and they have a few things going on in the US, but it's mostly in the UK, and they do liver. They focus on liver, so not quite every organ that TransMedics does. TransMedics, as a reminder, right now, they have lung, heart, and liver, and they're looking to add more organs to their system. Other people are saying that the reason why the stock is down is because of their airline business. People are saying, they should have never gotten into the airline business. The aircrafts are down for maintenance, etc. There's a lot of overhang over this stock, and so the next quarter, the next earnings report could be very volatile, but we get the stock at a discount, and that's why I've been adding it. I find this stock very cheap. My spreadsheet. Whenever I get close to a 0.10, 0.10, it's screaming cheap. It's screaming a buy on my spreadsheet. And when I look at the numbers, I love what I see. I see a stock that's predicted to grow by analysts 77% next 12 months. I see gross margin that's fairly high despite operating in airline at 59%. I see EBITDA margin at 13%. I have a long-term vision for this stock, long-term guidance of 10,000 transplants by 2028. There's a lot of good things going on for this stock. The CEO is very confident about the future. The company is CEO-led, founder-led company. I suggest listening to many of the calls that this company does. It really inspires a lot of confidence in me, which is why I've been buying it despite, of course, not being part of the field, and despite, of course, some of the risks having to do with the macro environment in the sense of the driving season, the availability for reimbursement, also few decision makers. There's a few hundreds transplant centers. They are the decision makers making the decision to purchase this service. And so there's risks, there's overhangs, but the numbers, to me, they reflect really a lot of negativity. It's really a cheap stock. 3 times forward revenue is what this company is trading at. So I'm happy to be adding to it right now, and I'm happy to own it. This was a stock that I've owned for quite a while. I used to be up more than double, and now I'm down like 10% compared to my initial buy, so I've been reducing my cost basis on this one. Now, moving on to another stock that I like, it is Celsius. Celsius Holdings. So Celsius is kind of the same story as TransMedics. The sales were stellar, everything was doing well, and then boom, you had one bad quarter. Celsius had a bad quarter because of Pepsi. Pepsi got greedy. Pepsi ordered too much, and so they are slowing down their orders in the US. A lot of cynics are saying, oh, Pepsi is doing that so that they can acquire them on the cheap. They are trying to make them bankrupt, and then they show up at bankruptcy court and get them on the cheap. That's the cynical view. I believe in the razor that says, don't assign evil. Don't accuse somebody of being evil when incompetence can simply describe what's happening, and I think it's just incompetence from Pepsi. They probably just ordered too much. They got greedy. They ordered too much. Now they got too much stock. The problem with the Celsius product is it's all about the Instagram-driven sales cycle. It's all about the taste, fantasy vibe, peach vibe. It's a very Gen Z-oriented drink. It's all about TikTok and Instagram and very popular among social media. And this company, of course, it's everywhere in the US. Everywhere you go, it's just everywhere, and it is selling out in the US. I mean, I've been to many places in the US. I see it all over the place. To me, it's gonna be the third energy drink. You got Red Bull, you got Monster. I think you're gonna have Celsius, and I'm on holiday right now. Christmas vacation. I'm in France. They just introduced Celsius to France, and so I'm happy to see it at stores. I see it at Carrefour specifically, which is kind of the kind of like more international grocery store chain that they have over there. And you can see not only do they have the big displays on the aisles, not only they have some sell-through, at least based on what I can see. Nothing like Costco in the United States. I just want to point out, this pallets are selling out at Costco. It's brand new over here, but you can see they launched the marketing. They have the Celsius logo in the aisle, and I see the success of Monster. I see the success of Red Bull. I see even some more obscure or less known US brands like C4 being successful here. I have little doubt this one will be successful in Europe. That's how you do. You create a global brand. That global brand is driven by social media, and then your local customers, they want to see it in their country, in their stores. I also want to point out, for those who do more research on the stock, I remember a lot of people complaining in the comments section about the caffeine content. So if you want to know what it is in France, and it's probably going to change country from country to country, or I don't know if this is an EU thing, it's 114 milligram of caffeine in France. So in the US, it's 200. So it's almost twice as little. I think Canada has 125. It'd be interesting for you if you don't live in the US or Canada. Go. I don't know, in Spain, Portugal. What is it over there? I don't know. But it seems like they're changing the caffeine content. Either way, 114 milligrams. You're still selling caffeine, but you're selling caffeine in a new content. I put this out there because this used to be a very famous coffee brand in France, and they just went out of business. Which is very interesting because Starbucks is not doing too well either, is it? And so I think there's a trend. I think there's something to be said about the end of coffee, and I see myself drinking espresso. I may be going out of style because the youth, the 20-something, they want to have an energy drink. They don't want to have a coffee. And so you want to play the game of investing for where the puck is headed. And in my view, the puck is headed towards these energy drinks. It's not remaining in coffee. Coffee is old school. This is the new school. This is what's cool on social. And so I think they're going to do really well. And I have no reason to believe that, they're lying about the Pepsi thing. They're not. It's Pepsi's down because they ordered too much. Sometimes it's just as simple as this. I expect this stock to have a great performance going forward. No financial advice ever on this channel, of course. As far as the numbers are very cheap. I wish I could show you. I guess I could have. I have all of the other beverages. It's kind of in that space. They're the cheapest in that space. Enterprise value over gross profit or revenue growth is 0.23. So that's quite cheap. Rule of 40 is achieved at a 56. EBITDA margin is 22%. So this is a profitable company. Gross margin is 50%. Excellent in the beverage space, and they're still predicted to grow 34% next 12 months. So I like the stock very much, and I also like the drink. I know many of you in this comment section tell me, oh, this is a bad drink. I actually like it much better than a Red Bull. Red Bull, you get that aftertaste, right? I find it much better than a Red Bull. But tastes are a cultural thing. It all changes from people to people. Tastes are sticky. Tastes are cultural, and because they are cultural, they are sticky. So if Celsius finds its customer, it can keep its customer for an entire life cycle, and they're going after the youth. They're going after the younger customers. Look at the following on social media of this brand, and you'll see it's heavily the most followed. It's the most followed brand. Same on Amazon, the most sold brand on Amazon, at least in the US. Moving on to Nubank. So Nubank is one of these stories. It's a macro story. And in fact, it's such a macro story that the stock took another leg down on Wednesday after the dollar strengthened. It took a major leg down, dare I say. So the stock is down 34% since November 11. It's still up over the year, but one has to wonder how up it would be, or if it would still be up at just about that level, if the Brazilian to USD exchange rate had not dropped by this much. Remember, this is a Brazilian company. They still do most of their business in Brazil. They're located in Brazil, and what has happened to the Brazilian reais, it's down 20%. That currency has devalued 20% compared to the US dollar. And so when you look at a lot of these companies in Latin America, whether it's Stone Coast, Stonier, old favorite of a channel, still own it, not planning on selling it. Mercado Libre, also a stock that I own, that I like. I don't cover it very much because nobody seems to care about this stock on YouTube, but I like it. These stocks are down. I think that's for the same reason, the strengthening of the US dollar. But in my view, as I highlighted in a prior video, the Fed is bluffing. The Fed is, in my view, no financial advice. My view, the Fed is bluffing. You think they're only gonna drop rate 2 times 25 basis points next year? I mean, and even it's the rates are going to drop in the US too. And when they drop in the US too, then that rate will go the other way. So, of course, over time, all currencies tend to collapse into the dollar. But I still think this is exacerbated right now by having a hawkish speech at the Fed and a hawkish Fed and somebody saying, oh, we're going to keep the dollar strong. It's all a bluff to me, but TradFi is TradFi and it just does what it does. Anyway, the underlying business is doing really well. They were able to handsomely beat the decline of the Brazilian reais compared to the dollar. They still beat it in the stock price. I find the stock cheap right now at $10.38. It's down 34% since November 11. So it call it in 6 weeks down 35% roughly. But the stock is still growing. There hasn't been a slowdown, a quarter to quarter slowdown. We haven't seen any of that. That stock is now nicely, handsomely cheaper than SoFi. SoFi at $17. Gosh, I remember covering SoFi for the longest time. $7, $6, $8. Now SoFi is expensive-ish, right? It's at $17. Still love SoFi, by the way. But now the company that's looking cheaper, by the way, it's not $17, $15. Now the company that's looking cheaper is Nubank. And so it's cheaper from a market cap standpoint, it's cheaper from a growth standpoint, and it's cheaper from an EV over gross profit or revenue growth standpoint at a 0.2. The stock is looking cheaper. It also has a better rule of 40 at 80, double the rule of 80. The problem is the currencies. That's what I use to explain it. Nubank is also doing some great things with Bitcoin and the Lightning Network and supporting the Lightning Network. Lots to like. I like this stock a lot, and I am looking to add to this stock. And the final stock that I'll cover today is LifeMD. Now, if you follow me on the Patreon, you know I've been adding to LifeMD quite a bit. So what about LifeMD? The growth at LifeMD is there, and it has not abated. Hence, I do not understand the drop of 59% from May 24 to December 24, down 59%. I do not get that, because the stock has been handsomely growing, and it's got a wave of flat-ishness back in early 2023, but now it's back towards growth. I think much of the drop today has to do with the fact that they actually do sell tirzepatide, so they have 3 months to stop selling tirzepatide. Now that tirzepatide, the GLP-1, is off the shortage list, I think they're gonna be fine. They already sell liraglutide, so I think they're gonna be fine. Yes, they have a weight loss product. Yes, the stock was probably overhyped a little bit when it went up to 12. When it was the big GLP craze of April, May 2024. But in my view, right now the stock is cheap. It's still growing very fast. Look at this company. It's trading at a 0.63 times revenue, forward revenue, and a 0.74 profit. So if you look at adjusted EBITDA trailing 12 months, it's trading at an 8 or a 7, depending on how you look. So I'll get to that difference between WorkSimpli, the issue with WorkSimpli. I'll get to that in a second. Key takeaways about LifeMD: it's much cheaper than HIMSS. They just launched their own pharmacy, like HIMSS. They're just getting started. It's new, but they opened something. I think it's in Baltimore or Philadelphia or something. They just launched their own pharmacy, so copying the HIMSS playbook. They stop giving the coupons for you to show up at Walgreens and you show your coupon and you buy your pharmacy out of pocket. They are slowly phasing that out, and they're launching their own pharmacy. They have more of a focus on primary care. They do treat slightly more advanced stuff. So HIMSS is really the entry-level health issues. They do attack some more advanced topics, and they do primary care, and they do physicals. And they're a platform for doctors. They're an e-platform or a digital platform for out-of-pocket pay doctors, and they have this plan where you can see the doctor up to one time monthly, and I think it's $39 a month. I've covered it more deeply in each of my videos. They also have a one-time fee, $139 to see for a doctor visit, and you can address whatever. It's a doctor visit is $139. You do it fully online. One of the things that they do that HIMSS doesn't have yet is that they have a partnership with Quest Diagnostics, and they have Uber-like phlebotomists. So a phlebotomist will come to your house, they'll draw your blood, and they'll analyze your markers of all sorts. You can do this with LifeMD. So more of a medium stuff. HIMSS doesn't do that. HIMSS really focuses on more entry-level things, but they're able to take care of more medium health issues. They also have a HRT, hormone replacement therapy programs. I know HIMSS has been trying to get into that. So in many ways, in some areas, more advanced than HIMSS, but also much smaller than HIMSS, and much less oriented towards branding, much more oriented towards, it's a MD. It's a digital family office. It's a digital family office is the way I look at it, and they don't do the tough stuff either, right? They do the medium stuff, they do the easy stuff. The key thing, why is LifeMD so cheap? I believe it has to do with WorkSimpli. So they have a SaaS, a mini SaaS software, a very small SaaS business that generates quite a bit of revenue and profits for them, but that is not growing very fast. They're trying to sell it. And so in this spreadsheet, the second line here is my assumption of the value if they were to sell WorkSimpli for market value, right? If they were to sell WorkSimpli to some other publicly traded firm, I believe the stock would be trading right now at 0.02. If you include WorkSimpli in LifeMD, then it's trading at 0.04. So no matter how you put it, it's at least twice cheaper than HIMSS. And this is not a mistake, by the way, the 53% and 50% growth. I tried to remove the slow growth, the slow revenue growth of WorkSimpli out of the equation. And actually, if you remove that, you find out that the eDoctor section of LifeMD grows roughly at the same speed as HIMSS. What is slowing them down in those numbers and those revenue, what you see, is WorkSimpli. At the end of the day, if they don't sell WorkSimpli and they keep growing the health division the way they have, you may not even notice the slow growth of WorkSimpli, but it's still impacting them. So I think WorkSimpli is making themselves less understandable to the market. So slightly different positioning. It's an on-demand and or a monthly pay doctor where you pay a monthly fee. You pay $39 a month and you have access to an on-call doctor once a month if you need to. And so because of that, they cover things that are a little more advanced, but they have some hints to them, like they're launching their own pharmacy. They do GLP-1s. So interesting business. It's a side position for me. It doesn't overshadow my HIMS position, but it is so cheap, and I can't help myself when I see a stock this cheap. And of course, the growth is just stellar, just like HIMS. Overall, this is a mega trend. Doctors, digital pharmacies, very mega trend. I believe we're going to see a lot of success in this area within the next decade plus. Anyways, this was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful day.